All right, everybody, welcome back to another edition of Market Talks with DrStoxx, coming to you from the live DrStoxx trading room and Discord. And if you're interested in joining me, watching every trade that I make, and I'm going to give you my entry price, stop price, target price, reasons for the trade, and usually a technical chart. When you are, if you're interested in all of that, and joining a really big and amazing group of traders at all levels of experience, from brand new folks to professional traders and everything in between, go over to DrStoxx.com. That's DrStoxx.com. And click on the subscribe menu, scroll down to live trading room. We also have an options room dedicated only to options. And you can join both of those at a nice discount if you're interested. Okay. So we are in the middle of, let me get over to the indexes. We're in the middle of a major market pullback. And it's possible that today, turnaround Tuesday, the 4th of March, 2025, and I'll tell you what, March is sometimes, not always, but sometimes the month when we do see the end of big pullbacks. It was certainly the bottom in 2009, and it was near the bottom in the COVID, after the COVID crash. So maybe there's something about March, early March especially, that is going to be beneficial for this big pullback. And yeah, March is typically a bullish month, one of the most bullish of the 12 months. And February, typically, especially in the last half of it, tends to be on the bearish side. So that transition from February to March is also at play. But we're not even thinking about seasonality right now. And in fact, we're not even really looking at levels of support and resistance. Why? Because the tape for the last several days has been driven by headlines. As I've said often, the headlines, the news cycle, the economic data points, the earnings reports that are coming out from companies, they will trump technical analysis. Technical analysis is an amazing tool. I started my trading career only doing technical analysis, but over the years, I've learned that, man, you really need to know the macro environment. You need to know the data points. You need to know the trends in earnings if you're going to trade consistently, profitably over the long term. And right now, we are just driven about by every headline coming out of President Trump's mouth, practically, and reactions to what comes out of President Trump's mouth from other world leaders. So we've got the highest level of tariffs being weighed upon some of our trading partners since the Great Depression. I'm not sure whether the tariffs came after the Depression or were they the cause of the Depression. I don't know. My economic history is not that great. But anyway, they're out there, 25% or more in some cases, and the threat of more coming down the pike. And of course, tariffs can be great negotiating tools. That's principally why they're being used here. That's my understanding. But if the other side is not willing to negotiate, and if they're going to play chicken, two guys on the highway running into each other, who's going to swerve at the last minute? That's kind of what's going on right now. So we've got retaliating tariffs that we're putting on other countries that have been putting tariffs on our goods for years, decades even. And now those countries are coming back and adding even more tariffs to the already steep tariffs that they have on our goods. It is what it is. We can't trade the market we want. We can only trade the market we're given. And we're given a very volatile market in recent trading. The good news is that we tagged 200 period moving average. Most of the indexes did this morning. And we're seeing a very, very nice bounce. Now, let's look at what's going on in this chart. This is the S&P 500. I'm going to turn off that, if I can find it. I'm going to turn off the, where is my, maybe I can't find it. Oh well, I'll figure that out later. I actually turned it on by mistake and now I can't get it off. So this crosshair thing. All right, so what's going on in this chart? Well, we do have some lines of support. We will draw those in, but that's not really the way the market is trading right now. And we had resistance, support, 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 support on this trend line right here. It's not much of a trend line. Trend lines that are slanted are less strong or not as strong as trend lines that are flat. This one is not a flat trend line. And in fact, it's sloping in the way we don't want it to, which is downward. We would like to see that as an upward trend line. The upward trend line is right here, and that it already has broken. So once we got below that, it was a cascading effect. A lot of stops got triggered, a lot of shorts and algorithmic programs kicked in to sell down that break. Now, we went all the way down this morning on tariffs that were imposed last night at midnight, all the way down to the 200 period moving average. It held. I mean, it got a little bit below, right? But it held for the most part. And we are now rallying back up. And here's a very bullish sign. All these big red bars in a row, increasing in nature. And today is no exception. All of those sticks, those volume sticks, are all above average. Now, in general, you want to see good, strong volume on uptrends. You want to see light volume on the pullbacks. But when you see heavy volume on a big pullback like this, it's only a matter of time before all of that share volume starts to filter out and we get to a place of capitulation. Right? As I've said many times, if everybody who wanted to sell, who wanted to go short, who wanted to move to cash, who wanted to move to bonds and safe havens has already done so, there's nobody left to sell. And if there's nobody left to sell because of supply and demand, the market has to go up. That's kind of where we're at. Now, is this bounce going to last any longer than this afternoon? We don't know. We're susceptible to major headlines. We're not trading per technicals necessarily. And President Trump tonight is going to address the whole nation in the State of the Union address. It's his first one as a second-term president. Very, very important because I'm sure he's going to talk about tariffs, and I'm sure he's going to talk about the economy, and I'm hoping at least he's going to talk about tax cuts and lightening regulations on business. If we get a lot of the latter and not a lot of the former, we should have a pretty decent day, follow-through day tomorrow. But don't get your hopes up until the highs of today. What is the high of today on the S&P here? 58.84. If we get to 58.85 and hold above there and close there tomorrow, unless it's a big gap and crap, we don't really want to see a gap and crap. But if we gap up a little bit and then we rally through that high and we keep on going and we close near the highs of the day tomorrow, I think we can pretty much say that the bottom is in for the next several weeks, that the market will not go much lower than that. It probably won't go any lower than that. However, and this is a big however, we now have so much overhead supply, so many places where the market could just stall out and just go flatline and give us several days of tight, choppy trade like we've got right in here, right? Couple days up, couple days down, one day up, one day down, tight, choppy, trendless trading. We saw it in this area here. We saw it over here. We saw it over here. We saw it over here. So the market does that for days and days on end. When we get to the underside of that broken trend line, when we get to the 21 period moving average and then the 50 period moving average, and we get to the underside of this whole volume shelf right there, right around 6,000, it's going to have some time. You're going to have a difficult time getting up above there. But you know what? We can have a pretty decent run from where we are now to up to that level. And if it just bases along there, we can also still make money. We'll find those stocks that actually are trending. And when you've got at least a modestly bullish macro for stocks that are doing okay, they tend to do really okay relative to the rest of the market. Also, those tight, choppy places, those are good places for us to do some premium selling in our income plays. And so we can do some of that. We've already got a few on, but think before the close today, I'll probably add one more because I've got several ideas for those. So that's the S&P. The NASDAQ, which of course is the more important index for us, is actually, in my opinion, looking better than the S&P. Why? Because we've come down further. We've got more upside before we start hitting those volume, the areas. It's probably right about there, where we start to get into a lot of overhead supply. And there's a little more upside between where we are now and there. And we're also trading right up at the highs of the day The S&P hasn't gotten there yet. All of that's good. We went long some of the NASDAQ stocks, some of the big mags by buying BULZ. Nice way of leveraging that. And I have a half a mind to get us into TQQQ or maybe some of the micro E-minis, the MNQ before the end of trading. I would not venture into the Russell just yet. It is looking better today, but it's still downtrending. Everything's rolling over. Everything's down near the lows. Yeah, it's a nice bounce back today, but there's still a lot of concern for the Russell. Now, this will change when the Fed starts cutting rates again. We're, I think, up to a first cut coming in May, and about an 80% chance of at least 2 cuts by the time we get out to December. I suspect that the Fed is going to have to do more than that. I think 3 or 4 cuts here in 2025 in order to buffer against the impact of tariffs, slowing down in trade. Some of the commodities are going to get hit pretty hard, and we don't want to see a lot of inflation. So, yeah, it's just, it's not easy. Not easy at all. Let's take a quick look at Bitcoin, which has been giving us trouble. I've been in and out of MBT. Last 2 official trades for us, I think, were stop outs in MBT. So I've been kind of avoiding it, but we have some longer term positions in Bitcoin. We've got that in our wealth building portfolio, and IBIT is the one we're using for that. We sold our ARKB for a very nice gain just to lighten up on Bitcoin because it was starting to look, when it was up in this area here, we sold out of the ARKB to take some profits, and it was a good thing we did because it's much lower now. So I had a friend, as I mentioned in the little preview to this in the live room, I have a friend of my my pro trading group. That's not a subscription service. It's just a group of professional traders. They all trade for a living. I belong to that group, and we share ideas, bounce ideas off each other throughout the trading day. And when I was up here, up in the like upper 90s, right, 97, 98,000, he said that Bitcoin was going to hit 85. He does work with Elliott Wave, right? So he was forecasting an Elliott Wave move down to 85. Well, it got a little lower than that, right? It got down to like 78 and change overnight. Horrible, horrible move. But that was a flush out. Then we had the weekend news, the news that a guy that services our boat knew about ahead of time that I didn't know about. We went boating on Sunday, took the boat out, brought it back in. He's helping us kind of get it docked and everything. And he said, "Hey, did you hear about Bitcoin?" Because he knows I'm a trader. Did you hear about Bitcoin? I said, "No, I didn't. What's going on with Bitcoin?" He said, "Oh, something about crypto reserve, Trump, and news, and up 12%." Well, he knew about it ahead of time. I didn't, which makes me believe that that news, I don't know, was it fabricated? Was it somebody made a lot of money off of it? But anyway, it flashed way up, came all the way back down. Now, today's movement is a bit better. So we've got, it's not a classic reversal bar because we're not setting here a new 20-day low, but we opened up within the range of the previous day, came very far south to take out a bunch of stops, and then now we're back up inside the range of the previous day. That is a reversal bar. It's just not a classic one because it's not a 20-day low. And very good volume, not too far from the 20-period moving average, and we are in the pink zone of an uptrending LRC. So all of those technical parameters suggest that Bitcoin's got a good move. All right, I'm not worried about anything else. Not going to look at gold or copper or anything like that. Let's take a look at the mags real quick. If we sort these worst to best, we've got Facebook leading the way lower today, but like everything else today, it's bouncing off of its lows, getting back up to near the open, but still pretty far away from yesterday's close. It was a nasty fall. Not exactly sure why, but it has been one of the best performing of the Mag 7, and it suddenly just fell out of bed this morning. So it makes it a little bit suspect for me. And when you've got just technically speaking now, we've got a whole bunch of lows right there at that level, just above the 50-period moving average. And it was looking fairly bullish on a couple of those days. And then it just, boom, falls out of bed the next day, that's a concern. Like there's something else going on here. Maybe something inside the company we don't really know what's going on. Better to leave that one alone for a while. Tesla, however, is interesting. Um, we did we buy Tesla today? No, no, we did not. Anyway, so all the way down here, this yellow box is a gap, and that gap has been open for a long time. And not all gaps have to fill. This one did not fill all the way, but it got about halfway into the gap, and then, like everything else today, started to reverse. Now, there's been a lot of negative sentiment in Tesla. We're looking at sales falling. We're looking at tariffs coming on parts from China. We're looking at the evaporating of the EV tax benefit, and on and on and on. And plus, Musk is so busy doing all these other things, he might not be running the company as efficiently as he would like to otherwise. He's focusing on the government being efficient, but maybe not his own company. So, for all those reasons, Tesla's been under a whole lot of pressure after hitting all time highs up near 500. Now it's down at 280. Not a 50% haircut, but about a 40% haircut. That's pretty significant for a big blue chip tech stock. I know it's not a tech stock; it's a real retail stock, but it really is, in fact, a software company, and a satellite company, and a communications company, and a transport company. So, where are we at? We're right back to the 200 period moving average. Volume is a little bit light today, considering all the heavy volume we've been seeing, everything else. So, I'm not so sure Tesla is going to be your best bet for a bounce, but it is intriguing. It is intriguing. And we do have a bullish divergence in stochastics quite clearly, right? Not in RSI, however. And RSI is not flashing yet a buy signal. So this is how I would play Tesla. I would play it off of an RSI buy signal. What is that? When you can draw a line over a clear set of tops. And to be fair, we probably should put the line right there. Maybe right there. Yeah. When that line breaks to the upside, regardless of what's going on in price, you have what's called a relative strength buy signal, and that could potentially trigger. It would have a pretty good chance, actually, of triggering a nice move higher. But until that happens, I'm not really interested. We did get into some Apple today, and it's interesting. Like everything else was falling, right? Down, 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 down. Apple was holding steady, even a little bit green, a few pennies green for most of the day. And then it started to see some upside. We jumped on it to make sure that we caught it before it got too carried away. And then as the market was rising off the lows, Apple started to fall. Not anything major, just a little bit of some intraday bearishness to kind of test some of those recent price supports. It did hit yesterday's low. It held there and has now since bounced back up pretty close to where we bought it. So this is an interesting point. When a stock is outperforming, right, the market's going down, and let me draw this out here. Sometimes I can't talk without a piece of chalk in my hand and a blackboard because I was a professor for 17 years. So when the market's going down, 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 and you see the stock over here that's either flat or doing okay or even going up, right? You think, oh, it's outperforming. It's bucking the trend. It has nothing to do with all the concerns the market is focused on right now. Let's buy that stock. It's a leading stock. It's going to do well. Then the market bounces back up. And all those fears that the market was worried about, suddenly they've been priced in, or they're not getting any worse, or the worst case scenario is what drove it down. And now that we realize that's not going to happen, it's getting a little bit better. But the very conditions that allowed Apple or whatever stock you're looking at to go up when the market's going down, now those conditions favor the market and not your stock. That's why that can happen. So you see a stock that's green on a red day, you buy it, and then that the market turns from red to green and your stock turns from green to red. It's just a matter of how the market perceives risk, right? So if the market sees better risk in the overall market, it's going to pull money out of Apple or whatever your trending stock is and go back into the indexes and other major stocks. And And you're going to see your stock, which was holding up very nicely in a red market, now starting to come down. Anyway, that happens. It just happens. But it is Apple. It has been outperforming. It has been one of the few mags in at least some semblance of an uptrend. And it is in a consolidation phase, and we're kind of near the middle of that consolidation. So not a bad place to buy Apple. Amazon, we put our options room into some calls this morning because it tested the 200 period moving average. It held. It went a little bit below to flush out the weak hands and the stops and rose back up again. That's just how they do it. It's just how they do it. you gotta love those market makers. So anyway, it's off. Amazon rather is off to a good start. Amazon is one that, of course, would get hit pretty hard if the tariffs, especially on China, start to play out and don't get alleviated anytime real soon. But I think this, on a valuation basis, on an AI cloud basis, this is a very good buy. The 200 period moving average is your granddaddy. It is, there are so many. There's so many big houses, right? The Morgan Stanleys and the Goldman Sachs and JP Morgans, they train their trading desks to program buy signals at the 200 period moving average. They do the same for the 50, but when it gets down to the 200, it's buy, generally speaking. And that's generally true for the big stocks, not necessarily for all the little guys further down the road. So Amazon is now benefiting from institutional money that's flowing in because it tagged the 200, it held, and it reversed. So yeah, I like Amazon. I also like Google, not quite as much, but I do like the fact because it's under the 200 and it didn't hold the 200, and so all those buy programs they kicked in got raked over the coals, and they're not going to be real happy. And so if it gets back up to anywhere near the 200, you're probably going to see some selling take place. But here's some good stuff about Google. There is a very nice looking, well-developed trend line. And every time it's gotten down, we could extend it further back. Every time it gets down to this point, regardless of what's going on with the 200, it moves back up again. We also have a big bullish engulfing candle today. It is a classic engulfing candle. Took out yesterday's lows, right back up again. Big green stick. It's not necessarily a buy right now, but I do have... Who did I put into Google? I'm forgetting which room I put into Google, but we got into Google earlier today, and yeah, it's up here at the highs of the day. So Google looks pretty good. Netflix looks really good, right? Really, really good. This is a very nice looking chart. I wish it wasn't $1,000 stock, because we could do some things with most of our members who trade. Most of our members trade smaller accounts. And, you don't really want to buy like 3 shares. I mean, not really much point in that. Or if you were to buy some calls on this, like at $1,000 calls, you're still going to be paying $20, $2,500 per contract. But look at this chart. This is phenomenal considering all that's going on in the market. Uptrending LRC, stacked MAs. You're not going to see that very often. Tag the 50 this morning. Rallied back up out of the pink zone. Oh, just perfect. Really, really perfect. It doesn't really get much better than that. Oversold stochastics. RSI did not come all the way down, which is okay. It's just relative strength. And this looks good. Qualcomm, I'm not interested in Qualcomm. We're already long in the wealth building portfolio, but if I didn't have a position and I was looking for something pretty safe, I might consider Qualcomm because it is down at a level where whenever it's gotten down to this level, it's bounced back up quite nicely. It's like a rolling stock, right? We used to play rolling stocks back in the day. You'd find a stock that looks a lot like this. You buy down here, you sell up here. You buy down here, sell up here. Rinse and repeat. To me, it looks like it's ready to get back up to 176, 177 or so. And that's a pretty good move on a $155 stock. You can trade this with calls. I would go out to like... next earnings is end of April, so I'd go to the regular strike on April. I would probably do the 160 calls, and they're not going to be too expensive. You could do a few of those and hold on until either the day before earnings or it gets back up there to like the 200. That would be a nice little trade. What else? There's nothing really else that I'm interested in over here, but let me show you my greens list, and then I'll take some chart requests. Worst to best. The firm is down there, but you're going to see so many charts that look like this. LRC uptrend. 21 above the 50s, not always, but at least the 50 above the 200, i.e. longer term uptrend. Pullback. This is an ABC pullback. So here's your A wave, here's your little B wave, and then right back down to C. And I don't know if that pullback is done. One big concern for a lot of these charts is we just don't know. We don't know what's going to happen overnight. We don't know what's going to happen with the State of the Union. We don't know what's going to happen when China, Mexico, and Canada start retaliating. They already are, in fact. Toast. We were in this one. We got stopped out, but it's still fairly well set up. Uptrend, pink zone, reversal. I don't want to buy it today. I want to wait until I see a good green candle above today's high. But we do have an early buy signal in stochastics. We don't really have one yet in RSI. TPR, we were in this one. We took some profits. It is lower than where we sold it. It's still looking very good. Stacked MAs, hammer candle in the pink zone, right at the 21 period moving average. It's not a real exciting stock, but this can really get up there, 95 or so. Actually, that's a pretty exciting move, I have to say. So this is a retail stock. Tapestry is the name of the, I'm forgetting what they sell. If anyone knows what they're selling, type it in the main room. We were in this one, as I said. The fundamental metrics are very good. Growth, ROE, accelerating sales, and so on. And it's a IBD leaderboard stock and IBD top 50 stock. And anyway, on and on. Very, very good. Here's your power gap on earnings. A little bit of a pullback, did not close it. You don't want to see the power gap close. Right back up to new all-time highs. Back down, a little bit of a weak bounce. And then the flush out move today. I think this one is ready to go back higher again. Your target price is at least going to be 90 from 82. But if it gets up to the blue zone and it takes a little while to get there, it could be 95. We were long Cure. We took profits on this yesterday. Glad we did. It hit the 200, started to roll back off of it. That was a signal for me to take profits. It's lower today, but we're still on a buy with this one with the breakout of the inverted head and shoulders. It's a leveraged healthcare. There's headline risk with healthcare, of course. If RFK gets out there and says, no more commercials for pharmaceutical companies in prime time, you'll see this come back in quite a bit. So DraftKings, I like this setup, actually. I know this is a big move up on earnings, which weren't that great, but it still went up. And then a major slam all the way down to the 50, a little bit of a weak bounce, and then roll back down to the 200. Today's candle, however, looks constructive. You're going to have some trouble getting through that level, and that's not very far away, 42. But, and volume has really been light the last few days. Right in here was very light. Like all the sellers are gone and not a whole lot of interest from buyers just yet. But I do like the move that's making today. It is in an uptrend. The MAs are stacked. And it's in a very good growing space right now. You'll see their commercials all over the place. This is an interesting one, Team. Interesting in that it's a very, very nice setup. Power gap, okay, this one did close, but we can allow for that because of the market coming down so far. And it's printing a very nice looking falling wedge, which is only bullish if it gets above that. But we can come down here and take a look at the RSI. We put a print line over the tops of those little pivot highs. I'm not exactly sure where to put that, but because it's very steep. But if that line gets broken to the upside, or at the least it breaks the 10 period moving average I have on top of it, that would be an early buy signal, even if the price isn't yet above that wedge. Keep an eye on Team. Upstart, kind of the same thing. Power gap, pull back with the market, reversal today in the pink zone of an uptrend, stacked MAs. This one is really good. I really, really like net. I might get us long in this one. Power gap on earnings, fall back with the market, ABC down to the 50 period moving average, tagged it, big reversal bar today, trading up at the highs of the day. Volume is not that exciting just yet, but it has been very exciting. So there's a lot of folks were buying up in this area. They're bag holders, of course. So by the time you get back up there, it's probably going to start to reverse and go down, but it's at 142 now. If it gets up to 170, that's a nice move. I like that. Amazon, Apple, DOCS is from the IBD leaderboard. It's hammer candling today, like a lot of things. Stacked MAs uptrend, power gap that did not close this time. Still a very good setup. We got stopped out on a tight stop this morning. Anyway, it is what it is. Fortinet, really like this one too. We're already long this one in the live room. Hammer candle, 21 period moving average, falling wedge, very nice looking. And Roku, kind of like Roku here. Power gap, pullback to close the gap. Stacked MAs, reversal candle, green today, and volume not there yet. We're just not seeing a lot of excitement, a lot of timidity on the sidelines here. People are still holding on to cash, but Roku can really get moving, and I think the fundamentals here are starting to improve. LRN. So this is a good one. I have my trend trade letter members in this one. It's from the IBD, from Market Surge, my A-list scanner, one of the best looking ones on that scanner. And it was just all up today. It was up yesterday in a hugely downtrending market. It was up the day before, and it's been bouncing quite nicely after a little tiny pullback to the 21. Very strong chart, very strong company, very strong growth. You've also got, before we were hitting all-time highs there, we've got a little bit of a peak above the RSI pullback. I'm interested in PLTR. We're long this one in the options room, and it's forming kind of a little double bottom. Not exactly, but on hourly chart, it looks like a double bottom. Right at the 50, pink zone, trading up to the highs of the day. Actually, we did get into PLTR in both. We're in PLTR in both rooms now. And Google, we saw that already. All right, guys, I'm done with that. I'm going to turn off the video now, start producing that, and I'll jump back into the room and take your chart requests. So don't go away. Give me just about 1 minute here, and I'll be right with you. God bless everybody watching this. See you soon. See you in the trading room.